If you're tired of random results, one day you are up, the other day you give it all back, and you want a strategy that you can rely on every single week, then this video is for you. Because I'm going to go over the exact same strategy that I use every single day. And I'm going to break down the full day that I recorded my forecast and my session, the execution, and exactly how I managed this position, which resulted in $4.3 thousand in profit, or about 2%. So like this, not only do you know the 3 simple steps that I apply every single day, but you can also see me applying it right now. And it's so simple that even a beginner can do it. Before we go into the strategy in this session, here is the payout certificate that I have received. This was a trade that I took on my FTMO funded account that I had just received after receiving one more payout from them. So on the 3rd of March, I received my payout. On the 4th of March, I took one trade that resulted in $4.3 thousand win. And I am now locking that in, trading my other funded accounts to be able to receive another payout with 2% profit. Now, receiving 217 payouts is off of the basis of 3 pillars. The first one is going to be direction. Every single day, the one thing that I'm going to ask myself is, where is the market heading? That is the only way that I want to trade. If I don't know where the market is going, then I'm not trading. Afterwards is the key level. The key level is incredibly important because I want to see traders be manipulated before I enter in any sort of position. So therefore, before every single session, I ask myself, what key level do I expect the market to move to first, in which I'm going to trade from? And last but not least, which is also very, very important, is our target. Because as you will see, if we had not picked the right target, these $4,000 would have turned either into a break even, or worse, even a small loss. And then all of this is going to build our entry model, which is going to be, we are only going to be trading in line with the direction, which is pillar number 1. Then we have to wait for the 9:30 a.m. open because we are doing this on NASDAQ. And then we have to wait for manipulation to that key level. And this is where the key level comes in. Afterwards, we're going to wait for the 5-minute engulfing. Once we have the 5-minute engulfing, we're going to set our stops below the candle body and our target at a 1 to 2 risk to reward. And this is the strategy that I apply every single day, and that has made me receive over 217 payouts. And if you want a full in-depth breakdown of how I approach the markets, then check the first link in the description, which is for my mentorship funded trading blueprint. So this was the exact entry that I took that resulted in a 1 to 2.2 risk to reward. I haven't done any analysis because I want to do that with you right now, so you see that what I just told you on the entry criteria is exactly what we applied here. So first, let's go into the 9:30 a.m. Eastern Standard Time open. At 9:30 a.m. Eastern Standard Time, we have to flip through the time frames. So let's start off on the daily chart. So on the daily chart, we can see that the market has swept the low and it has reacted incredibly bullish. Now we are in a range. So when you are in ranges, it's key to trade from level to level. But one of the things that you can notice is that before the market opened, the market tried to move lower, yet it failed, creating an engulfing candle on the 4-hour chart, creating therefore a very high probability of the market moving bullish from this newly formed order block. So what we would be waiting for is the market pulling back to that 4-hour order block and then moving higher. And this is where the key levels come in. And this gives us the direction. We are bullish for the session. So now what we're missing is the 9 a.m. candle, because we've already pulled back towards the order block and now we have the 9 a.m. candle. This is where our job starts. Every single day at 9:15 a.m. Eastern Standard Time, that's all that I need. I go into the charts and I identify the key levels that are on the charts right now. And we identify the 4-hour order block. Then we check the 1-hour chart and we are going to identify this recent order block. And we go into the 15-minute to see if there's anything clearer for us to trade. And then we can see that there's a high probability reaction zone because we have an order block within the order block, which means that we have now identified the bias, which is bullish for today. We have identified the 4-hour, 1-hour, and 15-minute key levels. What do we need to wait for right now? We need to wait for 9:30 a.m. Eastern Standard Time. We need to wait for the market to manipulate to those levels and then give us the engulfing candle. So right now we're going to see the 9:30 a.m. candle. We have a tap of the order block, but we know that the high probability reaction is going to be once we tap both order blocks. So we have that move lower. And by the way, I was actually looking for an entry model right here as the market reversed. But because the entry model 3 that we use inside of Funded Trading Blueprint always waits for extra confirmation, it saved us from our loss. And you'll see that when we do the reaction to the session. Then notice how we tap the higher time frame key level, both of them. So now we have trade in line with the direction. We have 9:30 a.m. Eastern Standard Time manipulating to those higher time frame key levels. Now, all that we're waiting for is a very nice engulfing candle. In this one, I didn't execute because we had a strong wick. But right now, on the next one, you can see that we had that strong move higher, which created a very beautiful entry on the engulfing candle with a 100 handle stop loss, and we target a 1 to 2 risk to reward, which when we go back goes perfectly in line with our extreme, which is something that we use very, very regularly. So with that, I execute on the position, it quickly goes into profit, and as we are at the extreme close to that final take profit, I went into the 1 minute chart and I started managing this trade aggressively. But instead of telling you what I did, let me show you my exact execution. So right now we have very interesting developments in the market. We have the market moving very, very bullish. And now the market seems to be moving to the upside. Now, we're coming to a point where it is seeming similar to what we had before of these V-shaped reversals, right? So notice how I'm already forecasting a possible reversal because of the 4-hour chart, which I'm going to talk about next. And now we're already starting to see some sort of confirmation where we have the market closing bullish on the 4-hour, right? And not only that, also already pulling back to that 4-hour try. So notice how I'm already identifying the bullish market structure shifts on the 4-hour and the retests on the 4-hour, which, spoiler alert, are going to give me my bullish bias to that 4-hour, trying to reverse and then moving to the upside. And so it's going to be interesting to see if what the market is going to provide to us today is going to be a move higher towards the extreme. This is pretty much what I would be expecting for today. So notice what I did. I just identified the key levels that we were reacting from. That gave me my bias. And the next thing that I look for is the target, followed by that move higher from the fair value gap. So now, within the first 30 minutes, the market does one of two things: pulls back, moves bullish, or pulls back, closes bearish, and that would give you an opportunity to short it in the next 4-hour candle. But that is not really what I'm interested in, because the likelihood of it happening is actually quite low. So notice what is important here. I'm identifying the key levels. I'm identifying what I want to execute on and what I don't want to execute on. So I was ready for the longs. Now let's go into the session. I think the good thing about this 15-minute and the fact that we moved all the way down is that now your stop loss doesn't have to be as open as I had it before. Because like now we're actually manipulating the bulls. So notice what I'm doing. As soon as the market opened, I'm asking myself, what does it mean with what the market just did? And where am I going to put my stop losses? And then notice what I said next. Because now if we engulf this candle, right? If we go here and we engulf this, that's actually going to be pretty clean as a 5-minute close. I'm already predicting what the market is going to do, and I'm not just saying, oh, I want the market to do this. I'm thinking I want to execute in case the market does this. And this is what you have to do as a trader. You have to be ready with what the market is going to provide, because you have to be quick on your feet. Now, I want you to notice how the market is moving exactly how I want it to move, yet I'm not jumping into a position. That is simply because I don't feel the need to jump into a position until I see exactly what I want to see, which is what is going to happen next. So we have the close that I want to see. We have that 5-minute engulfing.
Let's go. Stops are going below. 200 handle stop. Let's quickly go to the 1 minute.
and I execute with a 100 handle stop. By this point, what I have to do next is just to send everything to Fund the Trading Blueprint, which if you want more information of, where I do live trading sessions, I share all of my analysis every single day. Check the first link in the description. Now, this is important. Now I'm going into drawdown, and I want you to see exactly how I react to it.
So we have a new 15-minute and 1-hour candle now, which is, let's just say, not good for this position because I was expecting the 15-minute to move bullish.
Notice what I'm doing. I am already forecasting how the candle is going to close and how that is going to turn this trade into a loser. Why am I doing that? I'm doing that to reduce my emotions in case this trade turns into a loser. And that is what is important, because if everything you do when you're trading is thinking about all of the reasons why this trade should be a winner, as soon as your trade becomes a loser, you will become emotional because you expected a winner, the trade turned into a loser. The gap between your expectations and reality, that is emotion. And notice what I do once the trade goes into profit.
Now, like nothing is happening. I just said in the Discord, not assuming a win, also leaving stops open. Again, I don't think there's any point in doing anything yet.
So notice how my trade went into profit. The trade went into profit. At this point, every single person would be celebrating, moving their stops to break even. And I just said in the Discord, and there's a screenshot right here. I said, I don't expect this trade to be a winner. Maybe it is, maybe it isn't. Because if I'm expecting this trade to be a winner, if it reverses just like it did all the way back to break even, I would now become emotional. Now notice how the trade is going into profit, and what am I going to say next?
Okay, if we close bullish, we can manage the stops. So let's go, let's do this.
What I say is, if this happens, then I can do this. That is the mindset that you always need to have as a trader. If this happens, I do this. If this happens, I do this. If this happens, I won't do this. Meaning, for example, if the market was to now tank bearish, I wouldn't take a short because I knew that I would be shorting a very bullish market. So it's all based on rationale instead of, oh, trade is in profit, let me reduce my stops. No, we have to do our best to be as logical as possible.
The real challenge here is going to be once we get to the extreme.
What did I just say? And why did I say it? Emotions equals reality minus expectation. What I simply did was, okay, yes, we've broken out. Yes, we're out of the area of my break even, but we might still fully reverse. The market might still tag me out for a loss. I haven't managed my position, so I'm still assuming that I'm taking a full loss until I manage my position, which is what I'm going to do next once the 5-minute closes. But at this point, this is where traders start fantasizing about all the things that they're going to do with the money and all the things, how successful they're going to feel once this trade becomes profitable. And then if it reverses, it makes people tilt very, very hard. Again, I am just waiting. Now the 5-minute is going to close. And what am I going to do?
Okay. Let's move stops to minus 0.5. There you go.
I moved stops to 0.5. But Kimmel, why don't you remove risk? Because here's the thing. If we go back to the time at which I managed my position, let me ask you, if the market was to pull all the way back and then go bullish, would that not still be bullish? Because we are respecting the bullish order block. This move to the downside can still be respected. And so what I did, instead of managing to break even that the market could easily pull back to and still move higher, I moved my stops to the logical level that if tapped, my trade would be invalidated. And that was minus 0.5 because we have 1, 2, 3 order blocks protecting my position. I am way more focused on being logical than thinking, oh my God, right now I am running $2,000 or $1,600. I need to lock this in and this cannot go back to break even. Be logical. Think logically. Don't trade your P&L, trade the price action. And a lot of traders that move their stops to break even, they're trading their P&L. They're afraid of taking a minus 0.5, a minus 0.3. It doesn't matter if you take a minus 0.3. To me, a minus 0.3 and a break even, they're basically the same thing.
Like, the funny thing is that this is literally what trading is. You wait, you execute, and you wait.
This is not true. Right? Like you plan your whole session, But your whole session pretty much is one or two decisions of executing on a position and choosing your stop loss and your take profit. That's really what trading is. So that is why 90% of the time should be on planning, and then very, very little of your time should be on the execution. At this point, I went to pee, and then I came back. The trade was also still in good profit. And let's see what I said as soon as I came back.
Okay, we are approaching the extreme. Well, we are at the extreme.
Running $2.6 thousand.
Extreme now. Let me quickly mark out the swing high.
Mark out new levels.
That is the swing high right there.
At this point, I'm pretty much running 1.5R.
Removing risk from this position. Putting below the 5-minute order block.
First thing, I don't move to break even. I still put it below an order block. Price action over P&L. If it's minus 0.1 or minus 0.05, I don't care. That's a break even for me. So I'd rather put it still on a price action key level. Sending everything to Fund the Trading Blueprint. Check the first link in the description. And what am I doing here? When I'm looking for those swing highs, when I'm looking at the extreme, the first thing that comes to mind is, okay, what can make the market reverse right now? Because again, emotions equals reality minus expectation. So I want to reduce my expectations as much as possible.
Once we start moving higher, I'm very likely to start putting stops below the lows, because we are reaching that extreme. We are reaching that swing high. Can we have a very strong continuation? Yes. Even the 1 hour chart does look like it wants to give us that strong continuation. And for example, that we want to close this fair value gap. I'm going to be honest, I don't think that there's a need to try to squeeze everything in the market, especially today where we've already moved 319 handles.
In this case, I am trying to be as rational as possible. I'm thinking, this trade is looking amazing. It looks like it wants to move higher. But do I need to take the full move? Or as a day trader, am I here to profit, leave, take my piece of the cake and leave? It's better to have one piece of the pie instead of having no pie.
Obviously, market has been moving more volatile now, but like I wouldn't expect a bullish market to move like a lot. Right now, we're pretty much running 1 to 1.5 because I risked $2,000 on this position. So
at this point, we were running 1 to 1.5R, but I did know that on a good position, I do like to go for that 1 to 2R, and that's why I made the decision that I'm going to do next. At this point, we have the breakout, so let's see exactly what I say.
I think if we break out of the swing high, I might just manage the position.
So I predict, okay, if the market pulls back and then it continues breaking higher, then I'm managing my position.
So for example, if we start moving bullish here, I will be managing.
Again, if we move bullish, I will manage my position.
Okay, managed below the 1 minute.
At this point, I go to the 1 minute chart and we see the market moving higher, doing exactly what I forecasted, and I start managing below the 1 minute low.
Nice, we got that swing high.
Break the high, starting to have that breakout, pretty much very close to running 2R.
Okay, got that swing high. Okay, managing stops again. 3.5 locked in.
Managing the stops again because the market had moved so much. And again, when I'm managing aggressively, I don't want the market to pull back completely, because at this point I should have already taken profits. So I'm trying to squeeze the last push of the market. So this is why I'm managing more aggressively.
Okay, next 1 minute open. So let's see if we can get to 2R. That'd be great. So if we now start moving higher, I'm managing again. Boom, managing again.
We just continue moving higher, a little bit of a manipulation. You saw the candle being bearish for a few seconds, then moving higher. At that point, I'm moving my stops.
Below most recent low.
I'm like all over the place because I have to share it with the community. I have to do my trading. This is where it gets a little bit more hectic. And then what I always wait for is those 1 minute closes.
1 minute open in the next. Quickly push this here to share in the Discord.
Market is manipulating right now. If we move bullish,
we have that impulse higher, I'm managing again.
Exactly. Well said.
Like if we break this high, I'm managing below this 1 minute low. That would lock me in at 2R. I want the market to move above that high.
This 1 minute is just ranging. We're not moving above the 1 minute high. So I'm not doing anything, not trying to squeeze it.
Come on.
We have that breakout.
Moved
nice. That move
that
higher.
Is 2R locked in. Now I'm moving below this 1 minute low.
Moving again. We broke through that high.
And I'm very close to being out. Still moving higher. We have 2R locked in.
Let's see if we get tagged out.
I think I'm going to get out there. Meaning the market is going to tag me out.
So notice how I'm not closing the position. I'm waiting for the market to tag me out because I've already squeezed a lot of it.
Okay, we're moving higher.
Continues moving higher.
Okay, stops, go up.
We open and move higher.
Of this 1 minute again.
I move my stops.
And I'm out. Okay,
and I get tagged
perfect.
out. And notice how we were able to squeeze most of the move. And then when you check, what did we react from? We reacted once we closed the 4-hour fair value gap, which is something that we mentioned on the market breakdown, and once we tapped the other 4-hour fair value gap. And this is why this strategy is the one strategy that is so simple that even a beginner can execute on this. It has three key pillars: direction, key levels, and targets. So knowing what direction you're going to trade from, knowing what level you're going to trade from, and what level you're going to trade to. And all of this with one candle. One candle does everything you need it to do. And that is it. That is the session breakdown. I hope you all enjoyed. If you want to see a video going a little bit more in depth into the strategy, then check out this video right here. And if you want to check out the best prop firm, then check out Funded Next right here. Hope you enjoyed. Let me know if you want more of these. I'll see you in the next one. Peace.